Welcome, everyone. It is 9 p.m. Eastern Time, May 16th, Tuesday, May 16th, guys. Welcome to my channel. I am your host, The Digital Goat, guys. Welcome to Digital Goat Academy, where we give you pretty much information on how I personally, me and my team trade within the markets, guys, not to mention education that can help some of the newer retail traders that's out there, or maybe, an experienced trader that may be finding a new strategy or just haven't rekindled the basics. But welcome to my channel, guys. As always, hit that subscribe button on your way in or out, guys. Welcome. Sit back. Now, our topic today is going to be stop losses, right? Oh, stop losses. Everybody, people don't use the stop loss. Oh my gosh, man, I'm the greatest trader in the world. I don't use a stop loss. Guys, man, I think that's kind of counterproductive to not use a stop loss. What's interesting about that, before we go into the session, is that I was watching Bloomberg the other day, and a gentleman mentioned, I forgot what his position was for whatever bank, or he was an economist, whatever, right? He mentioned that, yeah, well, he was actually representing a bank. I forgot which bank, but he was just like, yes, us as the banks, we use stop losses. So who are you to say that you don't use stop losses when I know most of us don't have even a fraction of, what the banks dish out within the market, guys. So you're not trading with millions. So I don't know why you would not use a stop loss. It's just there to prevent failure, guys. We're going to go into the discussion of stop loss. So stop loss, like I said, guys, that's our topic today, stop loss. Now, what is a stop loss, you ask, guys, right? Now, if you're new to trading, you may not know what a stop loss is, guys. So pay attention closely, because this is actually, I wouldn't say advanced. I know I marked it with like advanced technicals, but this is very basic technicals. I mean, if you don't know what this is, you should basically do what my slide says and stop. Stop where you're at, because you need to understand the importance of a stop loss. Now, what is a stop loss, guys? I looked at Google and what its definition is, and I'm a sidebar what, I can break down how I view a stop loss, guys. Now, Google defines a stop loss as a type of order that an investor or a trader uses to limit their potential losses in the financial markets, right? So that goes to any market such as stocks, securities, currency pairs, guys, agriculture, whatever you're out there trading or using electronically when it comes to the financial markets. Now, guys, it works automatically by selling a security, currency pair, or stock when price reaches a certain level known as the stop price, right? So what's that saying is that if you're trading, most of us, obviously I'm a Forex trader, so if you're trading on MT4, you set your stop loss, guys, and what the stop loss is going to do is it's going to kick you out of that trade. So that way, depending on your account size, you're not losing all of the money that you have in. You only want to trade with a percentage of your account, not your entire 100% of your account, guys. So that's something to factor in, guys, right? So, right, what is its purpose? Well, I just named it, right? What is purpose? What is its purpose, guys? What is the purpose of a stop loss, right? Using a stop loss helps traders avoid larger losses if the price of the currency continues to drop or rise based off of your entry. This always prevents an account from being blown unnecessarily, guys. Now, I guess it depends on what your account size is, and I guess that factors into if you're using proper risk management, right? So you need to use a stop loss, guys. You're going to lose in the market already. We already know we're going to lose in the market. We can't avoid losing in the market. But how do you minimize that damage? You actually implement a stop loss. Now, I'm not going to actively show on MetaTrader 4, but we're going to look at some examples of a currency pair that I was actually looking at. So let me switch to a setup that I had earlier today or yesterday. Now, we had already taken the buy on this trade, but I did jump back in and it straight blew through my stop loss. So I want you guys to see it in not real time, but the importance of having it. Because say if I had like $100 account or a $200 account, had I not had a stop loss, with losing maybe a percentage such as like maybe, I don't know, $10, $20 with that account, you could possibly lose half if you catch it in time, if not all of it, guys. And that depends on how your lot size is. So it depends on the type of leverage that you're using while you're trading in whatever account size that you have. So I'm waiting on my trading view to load up, guys, so I can go ahead and show you the currency pair that I was looking at where the stop loss actually got triggered, and it would have been bad. So I know some of us, that actually brings up a good point. I know some of us, when we're looking at our stop loss, we feel confident in our position that, man, yeah, my stop loss went against me. I'm in drawdown. Maybe I didn't put a stop loss, but the market's going to turn around. Guys, don't be that person that just holds the trade to hopefully it's going to turn around, or says that it has to turn around. This market doesn't have to do a damn thing of what you think it's going to do, guys. I mean, it has to be within reason of what we've learned, but it doesn't have to do a damn thing. Now, it's going to be gold that I was looking at that buy, right? And I'm going to show you guys real quick. So let me go ahead and get all this out of here so y'all not focused on that. I'm gonna leave my setup. You see, I have my parameter set, guys, where we took the trade for gold. So I took a trade for gold yesterday, right? I can even show you where we got in. Where are we at? This was it right here. So called a trade for gold yesterday, a potential buy. It bought up for like 3 pips, then aggressively shot down, almost hitting my stop loss. Never hit my stop loss, guys, right? But the trade was still active. And the only thing is that when we got closer to our entry, I told my community that, hey, man, let's go ahead and take a smaller loss because it just makes sense. Let's take a smaller loss, analyze, and wait for the break, and then obviously enter the break. So we entered the break. I had a target of, where are we at? Was it over here? Oh man, I'm actually showing y'all the wrong thing. This was actually this morning. I'm actually showing y'all the wrong thing. So where was it at? Okay. This was yesterday. I forgot. That was another entry that, I was able to make a couple of pips. Then it blew through my secondary entry. But anyway, I think we had it at 20. Was it 2012? Yeah, it was close. So over here, yeah, I'm sorry. Over here, right? So if you guys look over here, right? So to the left-hand side, screen share and it's paused. Why? Okay, I don't know why my thing was not sharing. So y'all might have not seen that, which was good because I was actually explaining the wrong thing. But I fixed my chart. So this was the entry earlier yesterday that I gave my community out, guys, right? So I think we had like a 29, 24 pip, something like that. 20, 25, came extremely close. So we entered over here because I believe that price was going to respect this consolidation, retesting in 100%, which it did, but it was a small move, right? So we did get 20 pips. You see that price did actually hit 20 pips. Now around here, price shot down like when Tokyo opened. So what I told them was, hey man, let's close because it shot, you see it close right here. I was like, let's close right here and then see what it does based off of, and I'm gonna re-enter the break. And we did do that. So you see it even dropped down again. So you don't want to play that when it's too close to your stop loss, especially if you have the opportunity to get in. Your stop loss is not there, guys, for you to, not lose money per se. You know what I'm saying? Like, it's not there to be like, I can't believe it hit my stop loss. No, it's there that in case you're super wrong, it's not blowing your entire account out. Because obviously the objective for us is to make money, guys, right? Not give money back to the market. So it's there as a safety precaution just in case you're wrong, right? It's not there to say, oh, you won't lose. Too many times I find people, shocked at that their stop loss hit based off the loss. You should never be surprised that the market either blew you out or the market actually, you took like a $250, whatever the case may be. You took that loss. something that I practice is I factor in how much I'm going to lose based off of my lot size and based off the amount of pips it's going to travel if it hits my stop loss. I do the math. You can actually do that with babypips.com, guys, or FXTM. I hope I'm saying that right. Sometimes I mix it up. It's either FXTM or FTXM, but I'm pretty sure it's FXTM for Forex, maybe time management. I don't know. It's a website, guys. Google it, right? Google's your friend, B. So we hit 20 pips, but look, so it dropped again, right? Me ignoring that, man, this might be a continuation for the sell. Well, we did make the buy. So it came down to a support structure that I actually bought up here, back up to my stop loss. And I was actually looking for it to return back here, like a percentage of this bullish candle and then blast up. But like I said, I had another entry down here. The market straight blew through that. I had like a 24 pip stop loss, straight blew through that, guys. Well, if I hadn't had a stop loss, my small $200 account would have been to zero, if not probably like $20 within it. Depending on your leverage ratio with your broker should kick you out when you lose too much. If you have like a 1 to 50 ratio, or a 1 to 100. I mean, obviously you're not making any money with a 1 to 50 really, but a 1 to 100, well, I guess it depends on your capital, but a 1 to 100 is what most traders are using. So the market should kick you out when you've lost like $100 or something like that. And when it reaches that threshold, if you have a 1 to 500, it's going to take everything you got if you don't have over 500 in there, right? So factor that in, guys. And it's not literally 500, it's based off the percentage, but you definitely want to have capital over 500. That'll make it a little bit more sense to you guys. But had we not had a stop loss, so you see, if somebody re-entered, they got blown out, right? Blown out. Market just dropped for like, how many pips was that? If we entered right here. Wow, 133 pips. That is crazy that gold did that. But 133 pips, the market straight shot down, retested, and that's the buy that I got in, ignoring that, man, this thing may be wanting to sell down. Blew through, well, made a couple of dollars, blew through my secondary entry. But again, guys, like I said, I had a $200 account that would have went down to pretty much zero had I not had the stop loss. Let's look at it, because most of us travel with aggressive stop losses. So let's say if I didn't have a stop loss and I put a 0.1 with a $200 account in here. That's 34 pips right there. So that's $30, roughly $34, $35 already gone from my account, right? Had I not had a stop loss. $50 right here. So at 2010, that's $50 already taken from my account. At this point, I'm at 124. $124 loss out of a $200 account. It doesn't even matter if like I decided to put a stop loss like, down here or something. At 1995.62, I would have blew an entire $200 account. Are y'all seeing the importance of that? Because we're not going to be right all the time. You know what I'm saying? But man, had I only did 20, right here, 267.1, that's $26 gone if I would have did it at a 0.1. That's $1 per pip, right? Dollar per point that is moving, right? So $26 out of 200, that would have been a better percentage as far as like a loss to me versus my entire account, because I just refuse to use a stop loss. Because here's the thing, we get too overconfident in believing that the market is going to go in our favor, guys. We don't control this market. So reassessing it is okay. You know what I'm saying? Jumping back in blindly, that's not the move. You know what I'm saying? You're basically gambling at that point, but not even at that. Not even with you gambling, you're mainly like not even trying to use the fundamentals and technicals provided for you as a trader. You see what I'm saying? Because trading is a skill set. You know what I'm saying? It's not just something that you do or learn. It's a skill set. So there's rules that are applied. You know what I'm saying? And the greatest rules is the one that you implement yourself. So I just wanted to show you guys and have this quick class on stop losses, because I think it's very important that we actually pretty much promote that you want to use a stop loss. I get it. Sometimes, in certain pairs, like for my experienced traders, you already know, like you have a mental stop loss, and it's like, okay, when it hits a certain threshold, I may implement my stop loss as long as I'm not trading like with news. News, you might not have a chance to do that. That's why it's so important to have it, because I rather see that, man, I lost $26 than wake up and be like, man, this thing just blew my entire account. You see what I'm saying, guys? But I appreciate everybody that jumped on. This is 15 minutes. So yeah, we're at 9:15, guys. This is like a quick 15-minute tutorial. Not tutorial, but more so a lesson on stop losses and the importance of it, guys. It's very important to use your stop loss if you're trying to trade successfully. If you're out here just trying to make a couple of dollars, then I guess it doesn't matter to you. But if you're trying to create some type of substance with trading and actually reach those pinnacles that most people have been trying to do for years, guys, you need to incorporate a stop loss. You have to accept that you will lose in this market. And I think most people trade without stop loss because they think that that won't make them lose. You will lose in this market. You will continuously lose in this market. The difference is how you orchestrate your gains with risk management. So it's like you can lose more, and as long as you're minimizing the damage, you can gain more by losing more. You see what I'm saying? Well, not by losing more, but you can have more gains with more losses. So your gains can be bigger, even though you have a cumulative of more losses, if that makes sense. That should make sense. I mean, it's pretty straightforward, guys. But again, I just wanted to show you guys that. As always, hit that subscribe button, hit that like button. Comment, guys, if you found anything exciting or valuable in this. And again, anything that I need to improve on, guys, I'm open to the criticism. Hit that notification bell so you guys stay up to date on all my content. And as always, guys, I'll see you guys at the top, because we're taking everybody to the top with us this year, guys. It is the Digital GOAT. I will see you guys tomorrow for Digital Wealth Wednesdays. I do have a quick announcement about that. Digital Wealth Wednesdays, because I'm releasing my Patreon next month, it will no longer be streamed live on YouTube, guys. You have to be part of my own portal in order to get the live analysis that I do, guys, and it's only within my community. So if you see this, definitely drop me a message however you can. Again, guys, you can reach out to me at CEO_Digital Goats. That's with a Z. That's my Instagram. My other Instagram is Digital_Goats, guys. And my Facebook is Digital Goats. So you could just reach me on any one of those platforms. I don't have a Snapchat or whatever else is out there, TikTok and all that stuff. So reach me on one of those, guys, and I'll get you squared away. So I'll see you guys tomorrow for everybody that shows up.